But let me now welcome on board Ankit Agarwal, MD at Sterlite Technologies, and talk about how their business has been. Ankit, great to have you today on ET Now. You've recently completed a 1,500 crore rupee QIP. Walk us through what's the plan for utilization of these proceeds, how much is earmarked for debt reduction, growth investments, and of course, general corporate purposes as well.
We're very happy with this fundraise of 1,500 crores through the QIP process. We've got a very good set of investors who have come on board, both on the institutional side, which are both international as well as domestic. And this reinforces the kind of belief from these investors in our strategy as well as our execution going forward. In terms of the use of funds, broadly, we have talked about close to about 1,000 crores out of this being used for debt reduction purposes and balance of it being used for general corporate purposes. So this is something that will certainly help the business going forward.
And post the QIP, Ankit, what does the balance sheet look like? What is the debt reduction roadmap over the next 12 to 24 months? And are there any leverage or net debt targets investors should track?
Yes, absolutely. A big part of the focus for the QIP had been looking at strengthening our balance sheet. We definitely see strong opportunities for growth for the company, both on the telecom, but definitely on the data center side. We are seeing strong growth in terms of opportunities that we're seeing in the US, Europe, and of course, increasingly in India. To capture these opportunities, we felt strongly that we need to have a very strong balance sheet and gives us options for the growth going forward. So we have close to about 11 or 1,200 crores of net debt on our balance sheet. And with this fundraise, certainly I think we will be in a much stronger position. And going forward also, we do believe that we want to have a net debt to EBITDA of, about 1 to 1.2 times. And with this QIP, I think, we are well placed within that.
So what are your Capex plans over the next 2 to 3 years? Which areas, optical fiber, connectivity, AI data centers, or global manufacturing will receive the largest investments?
Yes, we've been very clear that we are looking at a good mix of our customers, both from the telecom side as well as data center side. Geographically as well, we continue to believe that a strong portion of our sales, close to 80 to 85% of our sales, will be US and Europe, and the balance will be in India. And to cater to this growth, we are investing in upgrading our equipment to make sure that we can provide the end-to-end solutions. More and more of what we will serve is through this portfolio we have developed called Neuralis. And we're very excited by how those opportunities are panning out. Currently, we are looking at about 500 crores of Capex for this year and probably similar numbers going forward in the next couple of years. But we'll continue to evaluate and, we will share the disclosures of our Capex plans with our upcoming results.
And could you update us, Ankit, on the current order book as well? How has it evolved over the last couple of quarters, and what proportion is attributable to India, North America, Europe? What's the split looking like?
So just regarding order book, currently we are, what we had last shared was in the range of about 7,000 crores. Since then, very happy to share that we have announced north over 10,000 crore order from a large hyperscaler in the US. And we continue to see a good interest both from the telecom sector as well as the data center segment. So I think we are quite well placed in terms of the orders and the opportunities that we're seeing. And as we speak, we're continuing to upgrade our product portfolio to make sure that we can serve this segment even better going forward.
Right. And as global optical fiber demand begins to recover, where is it that you're seeing the strongest traction today? Do you believe the industry has moved past the inventory correction phase?
Yes, I think there's definitely a strong demand in the market, both on the telecom and especially from the data center side. There's also been new applications where fiber optics are being required in good volumes, which are for the drone applications, first-person view applications. So as a combination of this, plus what's happening is the amount of fiber required within the data centers is also increasing because of this switch to higher capacity requirements as you're going from 10 kilowatt to 100 kilowatt kind of structures, and overall from speeds going to about 400 gig speeds to 800 gig speeds and even 1.6 onwards. All of this requiring significant increase in fiber optics within the data centers. So going forward, we do see a strong demand for the fiber optics. And in India as well, we have projects like BharatNet. In the US, you have large government projects being rolled out. So overall, we feel positive about the demand for the fiber optic market.
And how should investors think about EBITDA recovery over the medium term, especially? Will improvement be driven primarily by higher utilization, better product mix, pricing, cost optimization? What's going to drive that higher? Give us some color also on capacity utilization if you can.
Yes, so what we typically speak about is that, historically, we have, if you look at our numbers, when we are working at about 70% utilization, we typically are able to demonstrate about 20% EBITDA margins. So that's something that we feel confident about. In addition to that, as we build on our connectivity portfolio, we do see that margins can even be better than that. One thing that we are mindful of is that the current tariffs from India to the US are broadly in the 10% range, which could go up towards around 18% in the near term, based on the bilateral discussions that are going on. But net, we do feel that the business, as we continue to scale up our capacity utilization, the EBITDA margins can be north of 20%.
Right. And with Neuralis and India's first hollow core fiber cable now launched, what's the realistic timeline for these to move from pilot deployments to meaningful revenue contribution?
Yeah, absolutely. So I think the Neuralis portfolio is getting good interest from customers both in India as well as globally. What we broadly guided is our enterprise and data center portfolio, will move towards 30% of our revenue towards the end of this year. So that's something we feel confident about. And going forward as well, we do see that there will be a good mix of our sales between the telecom segment and the data center segment. And coming to the new technologies, there are three or four very interesting technologies, such as hollow core fiber, multi-core fiber, G654E long haul fiber, etc., which we are working on. And I think broadly in the next 1 to 2 years, we do see that some of these solutions will, start becoming more meaningful for the company.
Okay, Ankit, thank you so much. Appreciate you coming in and giving us that perspective with regard to Sterlite.